All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Yesterday morning, we talked about how kind of bullish it was in terms of just the price action in the market and, the volume element that had come in and what we had seen and, really something different for the first time here in the markets. We've had rallies in the market, gap downs and rallies and gap up and rallies and all of that. But, what we saw on Tuesday afternoon, very different, or excuse me, Monday afternoon, very different. And, then on the open yesterday, we saw really good volumes coming in. Now, I got a question yesterday after the bell asking me if tech was dead because tech underperformed yesterday. And, it's one of those questions where, every time you see something that underperforms a little bit, you kind of have to ask yourself, okay, is something going on? But, let's kind of take a bigger picture than just a snapshot of a few hours, because that was tech's underperformance yesterday. It was a few hours in the morning. It really kept up in the afternoon. It didn't have the same magnitude of change, but the movement was the same as the rest of the market into the close. And, then here to this morning, we have tech outperforming, and, some of yesterday's real big winners, some of yesterday's real high flyers, Walmart pulling back 1.5%, Pepsi down 2%, right? I mean, we're seeing a market that's actually behaving like a bull market here today in terms of passing on the baton of leadership. This isn't an everything up, everything down type of thing, and we've seen some differentiation start to come in since yesterday morning, which is, yes, maybe your stock's lagging a little bit in the short run, but overall, that's kind of better news for it in the long run. This morning's market opened very bullish, very bullish. It's one where we don't have quite the same volumes as we had, but if you look at its implications, it's very bullish. I mean, you look at the sector breakdown here. This is the first day where we have seen staples and utilities on the bottom. Real estate, which is interest rate sensitive, on the bottom. The conservative stocks are on the bottom. Materials and energy are relief bouncing. And then the five that you want to see, outperforming, and who cares, communications. That's still kind of a really interesting one, but new one. But, tech, discretionary, industrials, financials, all outperforming here this morning, which, if you're bullish, that's what you want to see. So yesterday morning, we had the volumes come in. This morning, we have actually the more aggressive, more risk-on trade action that is going on here. So 2 mornings that I think you classify as strongly bullish in a way that we haven't seen on some of the other rallies. A lot of the other rallies, it's everybody in the pool and everybody out of the pool, on the dip type of thing. But we will still have some pullbacks. They will still happen. But I do believe, as we talked about yesterday, bottom's in. And, if you go, well, I missed the bottom. Well, you know what? Market rallied, 120 points now on the S&P from where it was 15 minutes before the close on Monday. Right? I mean, that's a pretty fast, sharp rally. You don't typically see rallies that happen like this, and then they just go straight up. They're going to have pullback. We're going to have a day or two of pullback. We may come back and retest 266, 267, 268 fairly quickly. Right? Those things have to be kind of, those things have to be accounted for. I'm kind of expecting something a little more like this, where we had finally the shot up, then a few lag days, new high, and then we'll probably get a 3-4 day sell-off, kind of maybe when some of the earnings season ends here, kind of second week of November. So I wouldn't be surprised to see the market just kind of on tick. Yeah, it'll have a few slow down days and whatnot, but, tick up here in the 274, 276, maybe stretch to the 278 area, and then have, a 3-4 day pullback where it sets a higher low, and at that point, I do think, it'll be kind of market off to the races because, I know all the fears are out there. I know all the worries are out there. We've talked about them. We've addressed them. But you know where I stand and how just fundamentally ridiculous they are, and how fundamentally offset they are. And, I turned on, I just went on to Market Watch this morning. Big mistake, I guess. And it's basically tech companies sent an ominous message to investors. There was something in here about, why November 1st is the make or break day for the stock market. I mean, just some ridiculousness here in terms of, falling stock prices could lead to a long, deep recession. It's a lot of speculation, based on fears, not facts. And, it's just what we see during these types of periods. There are some sell-offs that we have seen in the past that are based on fact, and that are based on logic and long-term logic. But this one isn't. This isn't one where, yes, we understand why it's going down. We understand what the market fears are, but it's going down due to fears, not due to actual, real erosion. And we'll see how it all plays out. But anyway, that's where things are now. For the challenge, I have Adobe and cash. I wanted to add to Adobe here around the 200-day moving average, and then I talked about it yesterday around the close. I said, I want to, we're down here around the 200-day moving average, down here at 234. So okay, great. I'll wait for a gap up above the 7. Well, it rallied too much into the close yesterday. I'm not going to complain about it, but rallied too much into the close, and so, closed above the 7, obviously gapped up here today, with tech outperforming here this morning. But this is a very bullish gap. This is a very bullish gap right here, one that I do expect to hold. And, I still expect that we'll see Adobe up around the 266, 268 area. The time that it's taken for it all to do, I may not come out, glorious on my option, but I do think I'll come out better than where it sits, where it sits at the present right now. So holding on to my Adobe, looking at some of the things that have triggered signals, and going, okay, do I get an opportunity to get in? Here's Chipotle, which triggered yesterday. There's something I want to see a pullback to get in. It was up about $5 on the open, has pulled back since. I'm looking for something a little bit closer to the 7-day moving average to kind of come in order to play that, and not quite there. We'll see, where some of the other stuff lies. I expect that we'll see a few signals here today with a couple stocks that are out there, but we'll assess those as the morning goes. Really like the price action in Boeing. Really like some of the price action in these industrials overall. We have laggards like a Honeywell, laggards like a General Dynamics, which let's just say was taken out to the woodshed. Was absolutely torched during this market pullback here. And, when you look at the earnings, you could say rightfully so. Rightfully so. That said, to expect a big bad bear market in it, I don't think that's the case. So I'm looking for some basing action. I'm looking for an opportunity to be a buyer on a signal that may come into General Dynamics. AT&T's had a nice little pullback here, and back to these lows here from July, broke them, snapping on back. If I get a nice signal, we'll look to take it and run with it here, as I do believe that, AT&T doesn't, or path of least resistance is significantly higher. We have had quite a few earnings, Facebook, and Facebook earnings last night after the bell. There's been a lot of analyst commentary, as there always is. I look at Facebook, and yes, does the earnings report have some flaws? Sure, it does. But this is kind of the first time I'm willing to put Facebook back on my watch list since the whole Cambridge Analytics scandal back here in March. And that's kind of how I feel about the Facebook earnings report. I'm not willing to go buy it right here, but it is something that I do think can go substantially higher with what is transpired, with what is already priced in and what's coming, I do think path of least resistance will be higher, and so is on my watch list, and will be willing to trade it over the course of this quarter. And that hasn't been the case here for a while, since the Cambridge Analytics here for me. And so anyway, adding that to it, we saw GM earnings, and I think this is one of those where you can let the stock reaction tell you what's going on, and it's pretty accurate there, up about 8%. I mean, here we are with an automaker, right? Auto slowdown and all of this, and all this hubbub about the demise of automakers. But you look at General Motors and just the valuation here. I mean, just dirt cheap. It's not quite as cheap as Ford. I wanted to get to Estimize. Let's go to Estimize here. We can look at what the earnings look like relative to the estimates. And here you go with the earnings coming in at 187. With the estimates down here at 134. I mean, just totally, or 126, just totally blew away the estimates. And did it on a revenue beat, or a beat in the expectation of revenue. So an absolute kind of monster here as far as that earnings beat. The revenue beat is nice, but then you listen to kind of what they've said about the business going forward, and you actually have to look and say, well, does the market have to price in growth now for General Motors? Right? It hasn't been pricing in growth for General Motors, and the market's going to be in a position where it's going to start to have to do that. And if you have a value stock like General Motors that's now starts to price in growth, wow. Wow. We talked about Ford a while back. Ford does have growth, right? Ford is seeing revenue growth. And yeah, they're not reacting like GM here today, but Ford obviously had their reaction earlier. But these are two names that they're going to have a pullback. They're going to have a week and a half long pullback that's gonna dent into this rally. But I do believe that we see a higher low come in from that. And I do believe that ultimately that'll be buyable. And I think that investors can look back at this earnings report and say, look, things may not be all rosy, but for the value of the company relative to what's going to happen going forward, when we talk about the market fears is that growth is decelerating, right? We talk about growth acceleration and growth deceleration. It's growing, but is it growing faster or slower? A lot of fears are out there that things are growing slower than what they have been. Caterpillar, things are growing slower than what they have been. With Ford and GM, you can actually look at two companies where you can make a decent argument that not only are they going to return to growth, but that growth is accelerating. And, they're two in the market that are unique in that aspect. All right. So anyway, those are some of the things going on out there here today in the market. For the challenge, I'm going to hold my Adobe. I'll take a look, see where the signals are here this afternoon. See what I want to run with. But one of the things I want to talk about here today are some trade flyers. And, there have been a few times you've heard me talk about these. I talked about the IWM right back here in September, where just talked about, hey, you know what? If you're worried, you want to protect your portfolio, you want to hedge, go take a look at the 160, 161, 162 put spreads. Check out these put spreads. They're dirt cheap. They're going for 10, 15 cents. They'll turn into $1 if there's a pullback. And, talked about, hey, that's a really decent hedge because, look, in September, no real signs. In fact, everything's green, everything's rosy, everything's great, grand, wonderful. Market wasn't pricing in. You couldn't go to a Market Watch page and hear all the doom and gloom, right? You don't get that until the market sells off big. Talking about, look, that's what the market is not priced in. The market is not priced in a big pullback. And, seeing it pull back into these levels. And so you can pick some of these up for a song. I don't think you can look at these and go, well, they're all going to pay off. But when they pay off, one big payoff cancels 5, 6 that don't pay off, maybe even 8 or 9, depending on how you structure them. We also talked about AMD back here when it gave its topping volume, about some of the put spreads, some of the put options down in the 20s, low 20s, and how they would pay off if this topping volume is there, right? And so it's one of those where I don't go out and trade these on a daily basis. I don't go out and set something up like AMD and then pull it up every day and go, what does this price action mean? In fact, it is something that I will use a chart occasionally for. But what I'm looking for is I'm looking for something where the market has not priced in one way, where the market's kind of leaning all one direction, in the way AMD was. AMD, bullish, this, that, the other, it's going to the moon, it's going to get bought out, blah, 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 all this. Then we get this topping volume come in. Okay. Let's say it's something a little bit different than the overall story, right? And so I'm looking for things where maybe the chart's telling me something a little bit different than the story. Maybe the chart is showing, some topping or some bottoming, and, the story is really ugly. And so let's go out and take a look at a couple that are on my list now, and take a look at some of those. I show these just simply to to give some options here with this. I don't show these to say, well, this is going to happen. What I'm saying is that if this does happen, the options are going to pay off big, and it's one of those where you could make a decent argument that each one of these are going to happen. Let's start with stocks going to single digits, and we'll just start right here with AMD. And I mentioned it after the earnings report that I want back into my AMD puts, but I want a rally first. Now it pulled on back, and now it's rallying a little. I want a little more rally. I want to see it pop up above 20, maybe even fill this gap up into the 22, 23 area. That would be nicer. But I think this is one where the market is not pricing in AMD into single digits. And I think when you look at AMD, I think it's a single digit stock. Yes, I know the hype. I know all of the the arguments here for it. But this is one where I do not think investors are pricing in single digits. It's kind of this ultimate momentum type of name. We have seen this happen with other stocks like Overstock, which hype train, right? Here's the weekly. I'll show you the weekly. Hype train. Here we go. It's going to the moon. We get the topping volume. Makes its first big leg down. Kind of bases before its next big leg down. And before you know it, it's right back where it was before all the hype. Why? Because all of these momentum buyers are turn into net momentum sellers, and I think we have the exact same thing happening here with AMD in terms of this bounce, in terms of this pop, and what will ultimately be a drop. I don't expect it to go back to $2 or $3 or something like that, but I do think looking at AMD at single digits, the options are not too bad. I'm not in them yet. Again, I'm waiting for a little bit more bounce. But any of these, you want to give yourself 3, 4, 5 months. This is something where you go buy a weekly and go, oh, it's just going to drop tomorrow. Now, you give yourself plenty of time, a put spread, or some sort of really cheap put option. But AMD, top of my list here with that. Another one, Triple D. Now, Triple D had earnings yesterday after the bell. Went through them. I think there's another single-digit stock, meaning I think it breaks down below 10. I think in this space, we're talking about a squeeze that happened to push it into the 20s, and I think we're going to be talking about momentum traders taking this thing down back into single digits. I haven't priced out the options yet. Not going to. It just had earnings. So, the options are going to be kind of expensive. So, you know what? Forget it. I'll start pricing this out early next week and, taking a look and going, okay, can I get some value by doing a 9, 10, put spread. Can I pick that up for 10 cents? And if I'm right, it's worth $1. That's what I'll be looking for. But both AMD and Triple D to single digits, I think those are two very interesting stories, and two where these stories are eroding after a really kind of bullish momentum time period. And I don't think either are market related. I don't think it's something you can, you can buy AMD puts and be bullish on the market and pay, they'll pay off. Okay. But most of the time I'm looking for stories where there's a little imbalance. And, if I were to go tell you, what? The top performing market in the world for the next 6 months is going to be China, you'd laugh at me, right? You say that's ridiculous. Trade war. Duh. Look, ghost cities. I mean, look at this. I mean, look at the economic data. It's ticking all down. It's all going to hell in a handbasket in China. And you'd be right. It's negative, 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 negative. What do you know? When we're in that environment of ultra negatives, which way is the market leaning? Which way is the market slanted to the downside? So what happens if that changes? What happens if the market's perception changes a little bit? What is going to happen to a lot of Chinese equities? Can they move 30%, 40%, 50%? I'm not saying China's going to the moon. I'm not saying that's going to happen. But imagine if this month, U.S. President Trump and the Chinese premier, they sit down and they come back and they go, look, we're going to lower some tariffs here, here, and here. China's going to make this concession and this concession. We're working for a full-on free trade agreement between the U.S. and China. Preposterous, right? Ludicrous. That's never going to... What if that happens? What if that happens? What would happen to the FXI? What would happen to China? Well, it would rally tremendously. Tremendously. And so some 44, 45 call spreads out to March, April of next year. Is it really that crazy? You can look at this from an individual stock standpoint too. If I'm going to play this thesis, I'm going to play it with those stocks where they're heavily shorted, right? Where the bears are really into them, where the bears are really saying, hey, you know what? This thing is going down big. Because when those bears have to pop out, when those bears have to run, what's going to happen to the stock? Right? It's going to over-exaggerate to the upside. So I can take a look at something like YY. And I can take a look at a call spread up in this 70, 75, 75, 80, even the 80, 85 area. You go, can I get these for pennies on the dollar? And you know what? I don't have to watch it. I don't have to worry about it. I don't have to analyze it. I don't have to do anything except for come back and check it around expiry. And you know what? I got a decent shot of this thing paying off nicely. Some of the other Chinese names that are heavily shorted right here. C-Trip, CTRP. VIPs, which I think is the biggest gamble of them all. Right? There's a stock that's gone from 19 down to 4. And most stocks that go from 19 to 4, they go down to 2 first before before going back up, right? There's something really amiss and something really kind of going on here. So I think it's the biggest gamble, but they're heavily shorted, and you get some sort of squeeze action. To see this thing have a 3-day rally that takes it from 4.5 to 10.5 in a matter of 3 days would not be unheard of. And last but not least, and my favorite, Alibaba. Heavily shorted. One that has pulled on back, with tech, pulled on back with the markets, pulled on back with China, right? and one where if you look at their revenue growth, you look at what's going on, you could fundamentally argue this is a $250, $300 stock. I mean, what if you just bet back to a 200-day moving average return over the next 6 months? The 175, 180 call spread, something of that nature. Is that really out of the question? Is that really kind of crazy talk? Well, when you can pick them up for pennies on the dollar and the market is fully leaned the other way, you can really make some big money on a snapback. I'm not in any of these Chinese names yet. The option price has been a little too high. I started looking again at the option prices yesterday. They're looking a lot better. I'll let you know what I get into. But YY is one of my favorite. But with some of the options on that, it will require me to go in and put a limit order for a spread and make sure that I'm underbidding on that. See if it gets filled. It may take a day or two for me to actually get filled for the price that I would like. But China leaning, right? Leaning. There's another sector where, look, the market has taken it out to the woodshed and chopped it down despite record earnings. And all indications going forward that earnings are only going to improve. That's the banks. You've heard me talk about Bank of America. You've heard me talk about JP Morgan. You've heard me talk about these names. Great, fine, whatever. But you take a look at something like a JP Morgan, you talk about it down here near these lows, a return to 200-day moving average. No, that's absurd. That's not going to, 3 days later, it's $1 away, right? But I'm not going to talk about the bigger banks. You can go play those. The options aren't bad. But take a look at LendingTree, a stock that's gone from 400 down to 200 this year. It's a company that's heavily shorted. This is its longer-term chart. Has it had a 50% correction before? Yeah, you betcha. Well, it's sitting in 50% correction territory right now. Very heavily shorted. Pushed into a new low on high volume, gapping up here. Absurd, preposterous to see this go 260, 270 over the next 4 or 5 months. Not at all. Not at all. In fact, it wouldn't take a heck of a whole lot. You say, well, people aren't going to buy homes and, they're not going to take out loans with interest rates. And, yeah, okay, great. All those arguments are there. But they've been there. They've been there all year, and it's one of the reasons why the stock has gone on down, and I apologize for that ad there. But that's one of the reasons the stock has gone on down. But you look at this thing, this is almost 30% shorted. Almost 30% short. It's a huge number. It's just a huge number. And yes, the shorts may ultimately be right, but if you can go grab a call spread, you can go grab a call spread that plays for a potential short squeeze in the next 6 months. Do you really have to time it up? Do you really have to, worry about your chart and all of that fun stuff? Not at all. Right? You can go out and simply, set it up. If you get the market leaning one way and it snaps back the other, it's a big payday. And so Tree is one of my favorite in that space for that type of action and, to play that. The last space here is just the overall market. Okay, the overall market, interest rates, all of that, which I don't think it's leaning too much one way or the other. Right? It's one of those where, I'm on record. I don't think this is going to be a V-shaped recovery. So I'm not out there buying 284, 286 call spreads on the SPY. That to me just, the market will get back there, but I better have 6 to 8 months to be able to do that. Now, will I be willing to do that when I see the market kind of rally up a little bit more and then have its first pullback off this rally? Yeah, I'll be much more willing to do it, right? But we're still we're still needing some basing out process. We still need some some time for the market itself to gather itself. Yes, if the trade war is solved, then yes, the S&P will go back up to these levels. But what's the FXI going to do, right? FXI is going to outperform in a big way. So I'd rather have the flyer there. But one thing we'll see over time is we'll see the VIX pull back. We will see the VIX. We will see the VIX come on back to, to normal, right? I don't think we see it come back below 12 anytime soon. In fact, if you look at the VIX back here, how long did it take to shake out and to shake back down into the 14 area? Took many months, right? Now, this pullback in the market was not a VIX event. The thing that pushed the VIX the way it did back here in all my chicken scratch is the XIV, the ETF, that basically collapsed. We didn't have that. The VIX is working properly here. So for it to take this long to come on back to normal territories, as it did back here from February, I don't think it will take anywhere near that time. If you go look at the VIX options, the market is pricing in the VIX at 17 going forward. The VIX puts, the 22s, they're going for about $5. They're pricing in 17. Pretty normal. Pretty much expected. Nothing unusual there. But if you start going and looking a little lower and looking at the 14s and the 15s, you can actually get a little bit of value there. You're not going to get pennies on the dollar. You're not going to be able to pick something up for 10 cents that could be worth $1. Something where you're going to pick something up for $1 that could be worth 3. But your probability of being right here is significantly higher. Significantly higher. And you can play with the VIX. You can play with the VXX. Either way. Both are pricing in substantial drops. I want to play it with the VXX. I want to play it with the VXX, but again, I want to see that higher low on the market, come into play before, really stepping in and making that type of a trade here overall. But one thing that does interest me right here is the utility sector, is the consumer staples sector. This sector that has rallied on some of these fears, because I still think interest rates have a good chance of moving on higher. I don't think the market has priced it in. I think the market has priced in that interest rates are, that they've hit a top here in the short term. We've seen safety money come into some of these consumer staples. Now, some of them, like Procter & Gamble, monster record earnings. And I don't want to be shorting that. But some of these are pretty overvalued. Fundamentally overvalued. You've heard me say that on Pepsi before when it's gotten up here in the 110, 115 area. Fundamentally overvalued. Is Pepsi, anyone pricing out Pepsi here at 104, 106? The options are pretty darn cheap to play it down to that level. And so if you're bullish on the market, you want to take a little flyer, you want to say, hey, you know what, money's going to come out of these staples and into more aggressive sectors like the banks and whatnot. Looking at something like a Pepsi down in the 104, 106 area, very, very compelling. And in fact, I think if you're overall bullish on the market, to me, one of my favorite plays. I'm not saying the odds are great of getting down here. I'm not saying that Pepsi absolutely moves down here. In fact, none of these do I think your odds are even 50%, right? I don't think any of these your odds are 50%, except for the VIX. The VIX, your odds are probably 80%. But these are paying out big for a 30-40% chance. You hit on 1 of 3, you're very, very happy. And these are some ways that you can kind of get some exposure in a disrupted market without putting a lot of money in, without having to worry about stops, without having to worry about what happens tomorrow. And you just kind of set it and forget it. And your chances of coming back and seeing some big green are significantly higher than what they are if you're going to go out and buy a weekly call or put option and guess on what the market's going to do tomorrow. And so these are some of the plays that are on my list. You know, this is not in any way an absolutely comprehensive list of every possibility, but some of the ones that, you know, I think are very interesting or very tempting in this environment. And, you know, as I set them up, I'll show them to you. And you know, go from there. You know, in the same way I showed you the IWM, I showed you the AMD. You know, we'll do that. The biggest temptation for me is clearly YY. You know, that is my absolute biggest temptation right here, right now. And so I might be in this one before the end of the day today. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.